Well, what is a Friday if it is not crazy? And the SEBI order on Jane Street has ensured that for all of us today. The market regulator has banned Jane Street and its group entities from accessing the capital markets in its interim order that was uploaded last evening on its website. Now, as per this order, Jane Street made unlawful gains to the tune of 4,843 crore rupees through trades between August of 2023 and May of 2025. This entire amount will now be impounded, the largest in India's capital market history. SEBI has ordered that this impounded sum will have to be deposited in an escrow account which can be opened in any scheduled commercial bank, and that no debit will be made without prior permission from the market regulator. Now, Jane Street has been given 3 months to square off or close any of their existing positions or until the expiry of such positions, whichever happens earlier. Now, this matter goes back to July of last year when SEBI, the market regulator, had asked the National Stock Exchange or NSE to examine the trading activities of Jane Street to ascertain any market abuse. The report for this was submitted by the exchange in November of last year. Now, a month later, SEBI discovered that certain entities were running the largest risks in cash equivalent terms, mostly on expiry day. Now, cash equivalent in F&O terminology is liquid instruments that is easily convertible to cash, which can then be used as collateral to trade. Now, in February of this year, SEBI found prima facie that Jane Street was engaged in activities which were in violation of the regulator's PFUTP or Prevention of Fraudulent and Unfair Trade Practices regulations. As a result, SEBI asked the NSE to send Jane Street a letter of caution to dissuade them from taking any positions that could be manipulative in nature. However, the regulator found in May this year that Jane Street was in complete disregard of the caution letter and still running large cash equivalent positions, which was not only a violation of their regulations but also their own undertakings that Jane Street had given to the regulator. And it is this what led to the issue of the order last evening. That's not all. Last year, SEBI had put out a study stating that 9 out of every 10 retail traders lose money in the F&O space. How much did Jane Street earn? Not one, not two, but 36,500 crore rupees between January of 2023 and March of 2025. But what is Jane Street? Now, a global proprietary trading firm, 2,600 employees across the US, Europe and Asia, uses algorithms to identify trading opportunities in the market, and it's trading in over 45 countries. Now, does this order bring us to the end of this issue? Well, not yet, because Jane Street has contested the findings of the SEBI interim order and will be reaching out to the regulator regarding this. So it's only part 1 that has come to an end. We'll await to see more as the events unfold.
For more news and updates, all you need to do is follow CNBC TV18 on all of our digital platforms.